Good morning, everybody. It's Chris here from Student Education with the 4 majors analysis update for the 9th of November 2011. Hi guys, I'm just going to be going over a very quick update this morning. I'm going to be away for the remainder of the day, so I've got lots to do this morning, so I just want to press on really quickly and go over a quick update. I'm just going to stick with the daily time frame for now. Just give you a quick idea of what's likely to occur intraday. We can see quite a lot happening on the European side, Berlusconi looks like we're going to see if he's going to try and push through his austerity plan before he actually steps down. And it looks like the Italians are going to get their way now. And Berlusconi's likely to walk quite soon. And as long as this austerity plan for Italy is passed, then everything should be going according to plan for Eurozone. So Greece, there again, they're waiting to appoint a new leader. So they want to make sure that these things, these changes occur quite quickly, so there's not so they can actually push through these incentives for change in Europe, which will then obviously or potentially lead to further good news, and we could see price heading higher. The longer this stretches out, the more uncertainty is, and the more likely is there's probably going to be. Now that's going to reflect on the markets. However, if you look at the euro, the past couple week in particular, you can see prices pretty much stalled to the downside, and we've seen candles just going sideways. You can quite clearly see that there hasn't been any higher highs, but the momentum seems to be heading higher. The wicks in particular seem to be getting shorter to the downside and more price action happening at the top end, which is good. But there's just one or two things that need to occur, and to need to occur quite quickly. You'll notice that yes, we have seen price stalling and moving higher. However, there is a clear resistance level there. Price has failed or has not wanted to break higher than that. If you look at the bodies, for example, there happens to be a lot of resistance on those bodies. And there's one or two wicks to the upside, but the bodies are pretty much on par with each other. They're roughly around the 13. What would that be? So 13,850, just below that. 13,850, 83 maybe, thereabouts. However, I'm just going to plot a couple of fib retracements on here, and I'll just talk you through them. So you can see that the recent high we've had on the chart has been the ones we saw in August, to the lows that we saw back here at 13.15 back in early October. And if I just plot that and drop it down, you can quite clearly see that the 50% retracement area, price broke through it quite relatively well after an initial attempt. The second attempt pretty much broke through it, found a support, and we pushed higher at the latter part of October. Since then, prices fall back, and we're trading below that range. However, you'll notice that price fell to fall even lower than the 38.2, which happened to be price support and resistance here. And at the end of the day, we saw a candle on that, and the following one finding support, and then we could have looked at potentially the 50% as our first target, and it has been our first target for, in this case, almost a full week. And you can see that the 50% on this time frame is acting as a clear and definite resistance level. So we want to see that area breached. Now if I go ahead and plot a couple more, you'll notice that something starts to happen. So I'll plot one from the low that we've seen in October to the high that we've just seen recently. Yeah, I know, late October. And I drop those lines again. You can quite clearly see that there's a pattern emerging. There seems to be more lines forming together at certain areas on this chart, quite clearly at 13,700 where we had price support and resistance. So there's quite a strong support area there. The more we have these fib lines actually complementing each other, the more likely is that, depending on the trading styles of certain individuals, they'll be looking at certain fib eccentrics or support and resistance levels, and these will all coincide, and you can quite clearly see that price has been moving to those areas. So you can quite clearly see here that the 50% and the 38.2 have pretty much coincided with each other, and they formed this very strong support here at 13,700. However, the same exactly has happened to the upside. 38.2 and the 50 are quite close together, and you can quite clearly see that that's pretty much a very strong resistance level. So you can see that price has very much been moving inside this channel as such, quite clearly, and it's interesting that we can actually use those, and you can quite clearly see that price has at some stage along the way actually consolidated in this range. And what we're seeing now is a consolidation. Okay, what we're seeing pretty much is we've noticed that relative strength has been creeping up, and we are at the moment pretty tentatively trading or playing with the 50% RSI, relative strength. Relative strength, we want to see above 50 to confirm that we are ideally in a strong upside trend or move. And we are pretty much going backwards and forwards in that. And I think if we get a clear bounce or a clear break above the 138500 and support being found, then it's likely to say that the next potential target will be our 1400. And look where those 23.6 and 61.8 actually converge with each other, literally together at this 1400, which happens to be a very strong support and resistance level. So you can quite clearly see how these fib lines or retracement lines have been able to really work in this case. And there's one more thing. You can see we've had a high just recently and we've had a low and prices pulled back. Let's try and see if we can find out if there's anything else that the price can actually throw to us by just drawing these lines on here. And if I just move them around, you can quite clearly see, okay, if I move it higher, you can see that the 38.2 is exactly on that resistance level. So you can quite clearly see there's 3 resistance bands over there, for example. Now, what we can do is say, cool, if price with this change in Europe at the moment, now we might see further consolidation. But if price had a chance to break above 1385 and find support here, then we could potentially say that our first target on the overall daily trend would be roughly around the 1390-300 mark, and that takes you, funny enough, above to the next slight pause here on this upside. See that breakout, the pullback, which formed a swing, and the continuation. So the 1390-300 would be our first target, and our second target, and a very strong one, would be 1400. And a break above 1400 would take us to the institution moving average, which happens to be another support and resistance level here at 1410. Support, resistance, and funny enough, the institution moving average is in play. So you can quite clearly see how these pivot 1s, 2s, 3s, 4s, and all that type of thing can all come out of this information as such. And there's loads of ways of doing it. But I mean, this is a clear example of how you can use probably fib retracements as potential guidelines for support and resistance long term. Always make sure you have a high and a low and a bounce. There's always got to be a bounce along the way. So a high, low, and we've had a consolidation bounce. Okay, very, very important. Over here, we've had a low and a high and a bounce back. So make sure you have all these in place and then plot them on your chart. But as it stands over now, if we fail to see resistance over here going into the if resistance continues on the 138500 mark, then we could see a pullback back down to roughly the 137500 to the 23.6 mark, back to the 50 again. A break below that could see 13700 being our ultimate long-term support and resistance being tested. If we see price rally on the great news that is starting, well, I wouldn't say it's great news, but it's positive news. You know, we're getting rid of the old, and hopefully we're going to have the new in place, i.e. in Greece, new government, and in Italy, a new government, and hopefully this will stir the pot and we'll start getting some momentum to the upside drawn on that. But if we do see a break above 1385, then our first target potentially would be the 50% over here area, which happens to be the price support at the 1390-300, and overall the strong support and resistance level here at 1400, which we had 3 individual fib retracement areas. We had 61.8, a 23.6, and a 61.8 from the long one. Okay, hope that's helped. Take care. On to sterling against US dollar. I'm going to do the same thing with the previous one. I'm just going to plot some fibs on here just to show you a couple things. Bear with me for a moment. So we take the all-time high that we see in this chart back here in mid-August, and we plot it down to the low that we saw here at the early part of October. You can quite clearly see that 61.8 has been in play recently, and that pretty much coincides with the 61,500, which happens to be the institution moving average. And you can see quite clearly the price fell on 2 occasions or 3 occasions to rally about it, and then we saw a pullback. And it's the same over here. Price fell to close above the 61.8 consecutively on the break of that, and we could have looked at the 50% retracement area as our first target, which actually played out quite well. We saw support, and then we could look at 61.8 again as our first target, and we reached that. So failure yet again here at the institution moving average. Could potentially look at the 50% area at 15,9,500 being our next potential target. Okay, so we have this move and we've seen that price. If I had a plot one from here, from the low of October to the high that we've seen here on our February tracement, let's have a look and see what happens. You can quite clearly see that there's a very strong support and resistance level at 159500, which coincides with our long-term support and resistance level. 1600 has been, but 1595 is also quite a very strong support and resistance level. And if I zoom out, you can quite clearly see, there we go, through the majority of this year, we've had resistance, support, 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 further support, resistance, and price fell down. Over here, then we had a breakout, support, and further support. So 159500, very strong support. And that's plotting, you can see there's 23.6 and the 50% retracement. These lines coinciding at this area. So we know there's a very strong resistance level there. I'm sorry, support level. Okay, very, very strong. There's one over here that goes down to here, but I don't think it's so well extended. We should be probably past the 61.8 on this one. So we take it from the high to the low. You can quite see the 23.6 also forming on that. So we have three fib lines coexisting together on this 159500 mark. So very strong support. And as long as price is trading above that, ideally we're still looking for upside movement. And if I plot an upside trend or trend line, you can see that price is still extending, is still on the upside of that trend line, so we should still see further pulls to the upside. I've gone for the actual bodies of the candles. If you go for the wicks, there again, you take the last wick we had, still trading higher. Okay, swinging high. But for this to continue to the upside, we need to see 1615 being breached. If you break above that, then we'll look at potentially 163500 as our next target, which clearly you can see is definitely on. And then ultimately way back up here to the 2618 mark as our next potential target. So as it stands now, you can quite clearly see that there are other areas over here that you can, if price fails to break higher than 61.5, then we could look at potentially these areas over here as good target areas intraday. So 61.8 over here would be a good target area to on the 160500 mark, which is, and then the 50% would take us back to 1600, which would be back on the trend line. So we could see potential. We're seeing consolidation now to the upside at this area, so we could see something happening quite soon. So as it stands now, we know that on this particular chart, that 159500 is a very strong support and resistance level. So if I go and put that in, you can clearly see our fibs gave us an indication. You can see we're trading on the upside of that support yet again, and then we've got this uptrend coming up into play quite soon. The only one that's not in favor is the institution moving average, which is quite close. You can see that price action has been quite indecisive over the Asian session. Apologies. As we tackle this high that we've seen over here, which happens to be the 61.8. Okay, price failed to close above it yesterday, and we are trading at the low end of that. So we could look at potentially a pull back to at least the 61.8, which would take us back to the 1605 to start with this morning. On to US dollar Swiss franc. Let's have a look at this particular one. So if I do the same thing over here, we got a low. Take my fib retracement area, we got a low in August to a high that we saw back in October. And I drop my line, you can quite clearly see that the 23.6% fib has been breached just recently, and we're trading the upside of that. So as it stands now, as long as we're staying above this area here, then we could see potentially the 0.01 or the high at 9300 being in play. We have had a high and a low just recently, and we've had a bounce in, so we could use that as a potential reading. So we take the high and the low and we drop it, and you quite clearly see that just recently the 50% line has been breached, and we've had a pullback. Price stayed above that, and now on the Asian session we're seeing a slight pause. Notice it happens to be price support and resistance in this case, so very, very important. If I go and I grab this and I move it backwards, there we go. Oops, make sure I've got the right thing. You can quite clearly see that 50% support, further support, then resistance, then support. Okay, and you can see this swing over here. So what you're seeing ideally is swing highs, not so. And if we're swinging higher, then we should see further potential to the upside. And if we can see, this is the great thing about it now. If price can actually stay above this area, the support area at 8950, going into the US session today, then we could potentially see the next target area or the prior resistance area over here at the 38.2 fib mark, which took us to the high that we saw not yesterday, the day before. Here just below the 903, I think, as our first target, and a break above that would take us above a prior resistance level, and we should be shooting towards the 23.6 here at the 915. A break above that would definitely take us back up to the 9300 we've seen recently on the highs of the day. So that's giving you an indication. If price fails to keep at these levels during the UK session at 895, then we should be looking back down towards our price support and resistance here at the 8850, which happens to be, if I just zoom out, sorry guys, I was zooming in and out, it's probably going to give you vertigo, at the 61.8 mark. Okay, and you can see we start going into a lot of consolidation, which brings us back to the trend line here between the 61.8 and the longer one at, apologies, yeah, 61.8, which is this line over here, and the 23.6. A lot of consolidation here. You can quite clearly see we saw a lot of consolidation here at that level there. Okay, so that's how I tend to put these things together. I hope that's been benefit of you. I'm just going to do the last pair, the US dollar Japanese yen next. Last but not least is the US dollar Japanese yen. This one over here, we've had a massive upside candle after the intervention, and since then the price has been pulling to the downside. In this case over here, what do we have? We don't have anything really recently. You could take that as a high, but then we've had other highs since that. It's not really what we want to see. We've only got this massive one over here. So if you look at the fib retracements on this particular one, if you just go from the high to the low to the high, you can see quite clearly 38.2 fib recently at 78 has been forming a nice support. Yesterday's candle has broken low, which is showing a bearish sentiment. Ideally, the next target would be 77.50. Break below 77.50 would definitely look at 61.8 fib mark as our next target here at 77.10ish or 77.05. And break below that would definitely get us back into this consolidation range we've seen quite clearly, and 100% would be back on again. The CTC on either side is very negative. We're still trading below the institution moving average, and we've come from some serious highs and we're trading lower. So sentiment wise on the yeah, it's intervention and still doesn't seem to be stacking up. And we're heading back down towards 50, which happens to be price support and resistance over here. Quite clearly we see prior resistance at this level here at the 77.50 mark. So that'll be our first target. Support being found here. We could potentially see 78 being a pullback for that. And if we see any bounces higher, then yes, 78.50, etc., going into the next couple of weeks. However, 50 would be our first target. If we don't see support of this area, then ultimately we can be looking at 61.8% as our next potential target long term, and a failure of that would definitely see the 100% or the lows that we've seen currently at 75.60 as our next potential target long term. That's it, guys. Hope you have a fantastic trading day. Please make sure that you follow the rules of the CTC strategy if you are using them. Got to have it in our favor. I'm just giving you a brief insight into how we use fibs, or how you can use fib retracement areas for looking for support and resistance levels ongoing. These have all been on a daily, so all those levels that we've seen today have been on dailies, and you can just coincide those and put those levels on in your intraday charts. Until then, I hope you have a fantastic trading day. Please make sure you look at the news to see if there's anything that's going to really be moving the markets today. What do we have? We've got trade balance figures today for sterling this morning at 9:30 a.m. GMT. Expecting a worse figure. The previous figure was negative 7.8 billion. We're expecting an 8 billion trade deficit on sterling. Then this afternoon we've got a major jump. Nothing much else. I think the big ones that are going to be on everybody's minds at the moment for the foreseeable future will be the new coalition government for Greece and the austerity plan being passed in Italy, plus a new government put in place for Italy. So that's going to be the two major things. The longer it takes, the more uncertainty we'll have. The shorter it takes, the more likely it is to push euro and other currencies higher. Until then, trade serenely.